Trading gaps method 3. Trading gaps method 3. The trading gap method 3 is a trading method for trading breakaway or opening gaps. So the first thing that a trader must do is to identify the type of gap that we have. Is it a continuation gap? If it is a continuation gap, we will apply trading gap method 2, all right? If it is an exhaustion or a speculative gap, we will apply trading gap method 1. If, however, it is a breakaway gap or what some traders call opening gap, we will apply the trading gap method 1. In this video, trading gap method 3, all right? Let me correct this. If it is a breakaway gap or an opening gap, we will apply the trading gaps method 3, all right? So the trading gap method 3 is for trading, okay, the breakaway gaps or the opening gaps. Very, very important. So, but the first challenge is to correctly identify the type of gap we are dealing with. Is it a continuation gap? Is it an opening gap? Is it an exhaustion gap? Very, very important. If it is a breakaway gap or opening gap, we'll apply the trading gap method 3. In this video, I want to show traders how one can trade the opening gap or the breakaway gap like a professional trader. Let's get started. So the stock that we are looking at is Tesla Motor Incorporation. All right. The EPIC is Tango Sierra Lima Alpha. This company, okay, is listed on the NASDAQ 100. All right. And we can see on this chart, I hope you can see, but I'm going to zoom into it. Stay with me. I'm going to zoom into it very shortly. Gap out from here to here. All right, you see the two black lines here. If I zoom into it, you'll see clearly that I'm not talking to myself. All right, pay attention to the two horizontal black line on my chart. Here they are coming up. You see here? Okay, let me do it properly, okay? Now you see here, the stock gap up from here to here. So where the gap has started from, this is about, okay, practical preparation for gap trading like a pro. I recommend to traders to watch that video that we call practical preparation for gap trading like a pro. In that video, I told traders what we need to do. We must highlight the beginning of the gap. So in this case, the price gap up. So we highlight the beginning of the gap, which is the green line here on my chart. Now you see the gap. There's a gap, yes or no, all right? And then we highlight also, okay, the ending of the gap, all right? I'll call out the ending of the gap into red. That's the red horizontal line on my chart, all right? And now we will also highlight the 50% Fibonacci retracement of the gap. So you can see that I apply Fibonacci retracement to this gap here from the beginning to the ending of the gap. The 50% Fibonacci retracement level of the gap is the pink line here. So if you look carefully here, that's the 50% Fibonacci retracement level. I hope you can see on your chart right here. That's the pink line on my chart. So the beginning of the gap, the ending of the gap, and the 50% Fibonacci of the gap. Talking about the trading gap method 3. All right. So now, what are we looking for? We are looking for, all right, a trading setup on or near the 50% Fibonacci retracement level of the gap. Now, you have to understand that this trading gap method 3 is for breakaway gaps and opening gaps, okay? So, you want to know, so if you want to know more about how to identify the opening gap, how to identify the breakaway gap, I will recommend to traders to search for gap trading videos by the Pro Traders YouTube channel. So you will see me talking, explaining to traders, okay, different type of gap. Watch all these videos. Even if it take you a year, I recommend that you watch all of them, all right? This is not a joke because there are a lot of information on YouTube that are not correct, and this is what we are trying to rectify here, all right? So the opening gap, breakaway gap, all right, as our trader call it, we highlight the beginning of the gap, the ending of the gap, and the 50% Fibonacci retracement of the gap. What we are looking for a bullish trade setup on here, the 50% Fibonacci retracement level of the bullish gap. The opposite is also true. We will be looking for bearish trade setup, all right, on here, the 50% Fibonacci retracement level of the bearish gap. So here, the stock did gap up. The stock Tesla motor has gap up from here to here, and we highlight the 50% Fibonacci retracement level. What usually take place, my friend, the stock will gap up from the beginning to the end like this, may probably go a little bit above, so it gap up from A to B. Probably it may go a little bit up a bit, yeah, like this, all right, and then pull back into the zone of 50% Fibonacci retracement level of the gap. Something like this here, went up a little bit above the gap and then pull back near the 50% Fibonacci retracement level of the gap. This if is so important. If it is a breakaway gap, it is an opening gap, there's a high chance that we may see a bullish trade setup on here, okay, the 50% Fibonacci retracement level of the bullish gap. If it is a bearish gap, there's a high chance we may see a bearish trade setup on here, the 50% Fibonacci retracement level of the bearish gap. So what do we expect in a bearish gap? So if it's a breakaway gap, all right, so what is happening, the stock gap down from here to here, all right? And then quickly, maybe it went a little bit below, so it gap first from A to B. Probably, it will continue to go a little bit down, and then slowly, you return back inside the gaps, and then hit the level of 50% Fibonacci retracement level of the gap. Now, if that is happening, as soon as the candle is closed here, we have a bearish trade setup. This is a high probability trade setup, not a guarantee trade setup. Doesn't mean that definitely the price will go up, definitely the stock will go down. Don't take it as a sign, take it as a high probability trade setup. When we see a high probability trade setup, we'll apply what we call a multiple time frame trading method to manage the risk, to trade it like a professional traders. So for this stock that we are looking at, Tesla motor listed on a NASDAQ 100. Let me remove some of my lines so you can see clearly what I'm talking about here. We're going to go back to the chart now. So I'm going to zoom into it so you can see clearly what I'm explaining to you here. The most important thing is the understanding. I want trader to understand what we are talking about. All right. And once you understand it, the next step is to practice with a demo account. Test the system, apply it gently with a demo account, improve your skills, and once you are ready, put it into use, all right? That's the best approach. Don't just go and play with it and lose money, all right? Know how to do it first before you go live, okay? So now looking at this, so now you see here, this is the gap, you see here, it gap up from here to here, yes or no? And then it went up a bit, you see, it went up a bit, all right? We talked about this already. This is another setup here. And then what the stock did, it pulled back near the pink line. Pink line is what? The 50% Fibonacci retracement level of the gap. Here it is, you see, it pulled back near the 50%, yes or no? So here, on that day, we have what? A bullish trade setup. What do we need to do? We apply a top-down trading method. We're on a 2 days chart. Now I'm on a 2 days chart, not daily chart. All right? I prefer 2 days chart than a daily chart because there are less distortion, price distortions on a 2 days chart compared to the daily chart. All right? If you are a swing trader, it's better to use the 2 days chart than the daily chart. Okay? All right? So here on a 2 days chart, the stock pulled back. Here it is to retest the 50% Fibonacci retracement level. This candle here must close. So test it now. We are on a 2 days chart. We must use what we call a top-down trading method. So we can combine the 2 days chart. We see the trading setup. This is a beautiful, by the way, this is a breakaway. gap. How do I know? One of the characteristics of the breakaway gap, all right, is the gap that we have during the first Elliott wave. So if you understand a little bit about Elliott wave, the breakaway gap or the opening gap very often will take place, all right, during the first Elliott wave. How do we recognize the first Elliott wave? Now, go to www.24elliottwave.com, click on Wave Count Guidelines. So this will help you to become also a multi-talented trader. So you are using stochastic MACD RSI. At one point, you'll move to the next stage. Learn about Fibonacci retracement, Fibonacci extension, okay, market geometry, pitchfork tool, and then also you have to learn, okay, about the Elliott wave theory. Subscribe to 24 Elliott Wave YouTube channel and go to www.24elliottwave.com to learn to master the subject of the wave principle. Other traders are using, hedge funds are using the Elliott wave. You want to know also, all right? You want to know. It makes sense? So stop pullback, we are on a 2-day chart. We can combine the 2-day chart with the 2-hour chart. So we may, from the 2-day chart, we use the 2-hour chart for the signal. We can also use hourly chart for the signal, and then we can select 10-minute time frame for the entry. I will put the link in the description section about the multiple time frame trading method, or what we like to call top-down trading method. So here we have a bullish trade setup. Why is it a bullish trade setup? Because we have a bullish breakaway gap, and then a stock pulled back into the 50% Fibonacci retracement level of the bullish, okay, breakaway gap. We have a bullish trade setup. Now we apply top-down trading method without violating the trading triangle market first sector before the individual financial instrument. Do not ignore the market leaders, the economy news, and the fundamentals. Go to Google Finance, check the financials, or go to stochasticmadi.com, click on Finance, so you may know a little bit about fundamental analysis, especially if you count yourself as a swing trader. All right? Swing trading is about knowing both technical and fundamental analysis. Okay? Now we have a top-down trading, we have a trading setup on a 2-day chart. We will now go to the hourly chart or 2-hour chart, wait for the signal without violating the market patterns, and then we select a low-risk entry point to enter the trade. Here it is, boom, 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 boom. Now we have another gap here. Which gap do we have here? Now, I will not dwell on it because I don't want the video to be too long, but this one here is a typical breakaway gap. Continuation, so we see first a consolidation on these 2 days. Am I talking to myself? Can you see there was a consolidation here, or a balanced market? You price is oscillating, and then we have a gap. This is one of the characteristics of a breakaway gap: consolidation, and then boom, a gap. All right. Now, there are more to this because I don't want the video to be too long. This video is about trading gap method 3. A trading method for trading a breakaway gap or the opening gap like a pro. We highlight the beginning of the gap, the ending of the gap, and we highlight also the 50% Fibonacci retracement or level of the gap. If the stock goes above the ending of the gap a little bit and pull back to retest the 50% Fibonacci retracement level of the gap, we must now use a top-down trading method to trade it. The setup is happening here on a 2-day chart. We go to the signal time frame, wait for a signal. If there is no signal, there is no signal. And if we enter the trade, okay, and the signal fell, we close the trade. End of the matter. Here, this was a beautiful trade, and the stock is just going up big time. You see here? Followed by other gaps here, many gaps. There's one gap here, another gap here. You see another gap here, just gapping up, boom, 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 very fast. This is the power of trading gap method 3 to trade the opening gap or the breakaway gap. So when you hear trader talking about opening gap or breakaway gap, all right, think of, okay, the gap that usually take place during the first Elliott wave. I will be recording more videos about gap trading to teach traders how to trade gap like a pro. The trading gap method 3 is for trading breakaway gap or opening gap. It makes sense? it is also powerful. So in this example, we have a bullish gap when the stock gap up. What we need to do, if it gaps down, okay, all right. So if it gaps down and it is a breakaway bearish gap, all right. What are we doing? We do exactly the same thing. Gap, so price was going. So what we are expecting, my friend, we see a consolidation taking place first. This is one example. One of the characteristics of the breakaway gap. There are other characteristics. That's why I recommend to you to check all the videos that are recorded about gap trading at Day Pro Trader YouTube channel. All right. One of the characteristics. There are other characteristics for breakaway gap, but one of them is that very often you see consolidation first, and then a stock gap down or gap up. Okay, so consolidation, blah blah blah, and then gap from here to here. So we highlight the beginning of the gap and the ending of the gap. Okay. And also we highlight the 50% Fibonacci retracement of the gap. Because it gap down in this case, it's a high channel stock. If you gap down like this, it may go a little bit down more before coming back inside on or near the level of 50% Fibonacci retracement level of the gap. If it is a breakaway gap and the price reaches the 50% Fibonacci retracement level of the gap, we have what we call a bearish trade setup, because we are talking about a bearish breakaway gap. It gaps down. Here, in this example of Tesla Motor Incorporation, we were looking at a bullish gap. Here, when we have a bearish trade setup, what do we need to do? We need to apply a top-down trading method to trade it. The setup, the signal, and the low-risk entry point, paying attention to the market, the sector, the market leaders, and the economy news at Google Finance, okay, Forex Factory. Whether one is trading stock, commodity, futures, or currency pair, or forex, the same rules apply. It gap up, it gap down, it's a breakaway gap. This is how we trade it like a professional traders, step by step, and we're managing the risk. If you are a new trader, take time to master the strategy first, all right? Watch videos at www.dayprotrader.com about gap trading methods, all right? Check our video at Day Pro Trader YouTube channel. How do we recognize a breakaway gap? So you may be able to understand or to identify a valid breakaway gap. All right. Once you are certain that this is a breakaway gap, now you apply the correct trading method to trade it. The trading method, the trading gap method 1 is about speculative and exhaustion gap. Trading gap method 2 is about trading continuation gaps. Trading gap method 3 is about trading the opening gap or breakaway gap. The challenge for traders is to be able to identify correctly a breakaway gap or the opening gap. If you like this video, please give us the thumbs up. If you dislike it, we want to know, give us the thumbs down, all right? And if you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. All right? If you love our video, now hit the subscribe button so you may stay tuned and watch more tutorials like this. I will be recording more videos about gap trading. I will be also recording live trading videos about gap trading when I will be demonstrating to traders on live charts how one can apply each trading gap method. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about trading gaps method 3, a trading method for trading breakaway or opening gaps. Until the next time, enjoy yourself and be very happy. Speak to you soon.